Hello everyone, my name is Pedro Nunes. I am an Etoro popular investor, also known as PM Nunes, and this is my monthly video where I speak about the portfolio and where I speak about what's happening in the markets and the things I want to comment. And I call this monthly video the investment dossier. This episode will be a little bit different, and I call it Back to the Future. I call it Back to the Future because since the beginning of the year, the market is dropping. First, because of the inflation and the response from the Fed. The perspective that we have now, it's much bigger increases of the interest rate than the beginning of the year. And this is also related with the second aspect, which is the war on Ukraine, which led to higher commodity prices, higher oil prices. War in Ukraine also had an effect. We can speak about disruptions. We can speak about a world where things will be different. Globalization, as our Marx stated in the last memo, will be disrupted, and we need reliable production instead of global cheaper production. And during these two main issues that are still the main issues right now, about inflation and about war and about the rising interest rates, our portfolio did well in terms of decreasing less than the market, less than many of the most respectful popular investors that I admire a lot. And this was phase one, and we had in the beginning of the year a lot of cash. We had about 50% of cash. It's a lot, but I perceived that the market was going down, and we start buying. And at the moment, we still have 8% of cash for the possibility of the market still goes further down. But at this point, what I'm especially preoccupied is thinking about the future. That's why I call it Back to the Future. Because during this first quarter, it was all about a soft landing. And now the perspective is not to time the market for where the market goes up, but take full advantage of the way it's going up. One of the decisions I made was to invest in a lot of index funds. You can say this is a passive solution, but what I was trying to avoid was specific problems with specific stocks. As we are seeing now, we have, especially in the tech sector, companies that dropped more than 40 or 50%. So I was trying to get away from a specific risk from specific companies. But now I feel comfortable and we are preparing for the future. The only risk we have is to wait and to experience a little more drop in the way up. This is the only risk. We can wait less or we can wait more. But as in the past, the stock market will recover. The end of this quarter, the second quarter, and till the end of the year, the third quarter and the fourth quarter, we are going to introduce a path where we will move from the passive perspective of the market to a more specific choose from individual stocks and individual companies or sectors or different assets. Because we did well in the first part, and most of the times we do well when the market is going down, but it's time to concentrate also when the market is going up, and we have to take advantage when the market recovers. Timing, it's very difficult. Now it's not a time for timing the market because, for instance, I'm recording this on the beginning of May. We will have a Fed meeting, and what's happening in the previous meetings was the Fed gave some hope for the market, and the market rise again. So if we introduce now more protective measures, they can be counterproductive. So it's time to think about the future. In the recent days, we heard that Warren Buffett was buying US stocks. He is also thinking about the future. And the message I want to leave here in a clear way, it's we have a solid foundation and wait patiently for when the market will go up, because history show that we can wait a little bit more, a little bit less, but the markets always recover, and we are preparing the future for that scenario.